We are here to talk about AIA housing loan. Okay, so part 1 of our session is to present to you our AIA home loan sales slides. Okay. So firstly, let us share with you on why AIA housing loan is simply your smarter home loan solution. The first and biggest advantage that we have over banks is this one here: low long-term fixed rate. Because nowadays, when you go to a bank to apply for a housing loan, okay, the only option available to you would be a BLR package. Whether it's BLR -2, -2.4, it is still BLR, and it's all subject to change. Whereas AIA housing loan is actually long-term, low fixed rate. Okay, you can enjoy security and peace of mind for the entire loan duration. For example, do you know that a 1% increase in BLR could actually increase your loan installment by 11%? Just a 1% increase can increase your loan installment by 11%. And then, if your installment does not increase, what happens is an increase of 1% would actually extend your loan further by another 10 years. When you go to a bank and apply for a loan, they will tell you now is the best time to apply for a loan. Why? It's because interest rate is at an all-time low. That's very true. But then again, banks will also tell you, hey, don't worry, you can take a BLR loan because it will continue to remain low for the foreseeable future. But what we have on our hand is actually research paper from Citigroup, from M Research, and CIMB. These are all banks themselves and local banks nonetheless, all predicting that the OPR will increase around 0.5%, latest by 2013. It's not AIA who is saying interest rate will go up, it's actually banks themselves, the professionals, the research team, that are saying that by next year, rates will go up by at least 0.5%. So our main and first advantage over banks is this one. Something that we can offer that they can't. Low long-term fixed rate. Second one is this: zero moving costs. When you come to AIA, we also have a zero moving cost package, whereby we pay for the legal fees, valuation, stamp duty, and disbursement. All these fees add up together will be approximately 2% of the loan amount. For example, a 500,000 loan, if they were to refinance over, all the legal fees add up together will be approximately 8,500. Okay? Why is this again an advantage? Is that simply banks are no longer offering zero moving costs. Okay. However, AIA is still doing it. And the good thing is this: effective July 1st this year, one of the Bank Negara initiative is that there is no longer any lock-in period. Meaning that regardless of whether you have signed a housing loan with them 1 year ago, 2 years ago, 5 years ago, or even 1 month ago, you are no longer bound by the lock-in period. You can refinance out anytime you want. They cannot charge you the full prepayment penalty. They can charge, they can charge you a minimum cost. It ranges from 500 to 1,000. Consider very minimum compared to the original, let's say the penalty of 3% of original loan amount. So there's more reason for your client now to switch over to AIA. Of course, it doesn't mean that it's really zero cost, because when they switch over to AIA, they need to pay for legal fees and all these things. So at our zero moving cost package, AIA will be able to pay for the customer this one here: legal, stamp duty, disbursement, and valuation for the loan agreement only, not the S&P. If you are refinancing over, you don't need S&P anymore. Just the loan agreement side. Sorry?
Can I ask a question now?
I'm not sure. Okay. Then, the third selling point is this. We have to emphasize to you that there is no such thing as a fixed BLR package. When you go to a bank, they will say, hey, BLR might fluctuate, but don't worry, the -2.4 is fixed. Actually, there is no such thing, because even the -2.4 is subject to change. It will be stated in all the offer letter that the bank will give you that the spread or the margin is subject to change. What they do not point out is when they talk about the spread or the margin, they are actually referring to this minus 2.4. Okay, so there you have it. An offer letter from a bank stated in black and white that it will change anytime they want, even though they tell you verbally it will not change. An offer letter by AIA stated in black and white, it will not change. So which one would you prefer? And furthermore, just to share with you this, they can always add in new clauses. For example, this new clause, should you have 1 month outstanding in area, we should revise the interest rate to 0.5% above the existing rate. This clause was not stated in the original offer letter that the customer signed 3 years ago. It was not stated there. 3 years later, when the loan has been fully disbursed, the customer has been paying promptly, the bank issued them a letter telling them of this condition here. Hey, if you pay us from now on, if you have 1 month late payment, we have the right to increase your rate by another 0.5%. So this client called and said, okay, what if I do miss 1 month payment? And then in the second month, I regularize it. What happens? Will you reduce the rate back? The bank said, no, we will not. It will remain as it is. So this is when the customer decided, because of this clause, that we finance over to us. So be aware of all this fine print. What you sign on the offer letter is basically just an illusion, because the BRR can change anytime. Today you sign the offer letter at 4.2%, BRR minus 2.4. Tomorrow when rates goes up, or at the bank's discretion they want to change anything, it will no longer be applicable. There is also flexibility when it comes to AIA fixed rate. Many people confuse our home loan with something like a car loan or hire purchase, whereby interest rate is calculated on the original loan amount. Our interest rate is actually calculated on your amount outstanding. The more you pay, the more you will save. Be sure to emphasize this to your customer. Our interest rate is on a daily basis, exactly the same as a bank housing loan. Just the difference is ours is fixed, theirs is fluctuating. Another thing you can also emphasize is this, payment-wise. A lot of people find that AIA home loan is very beneficial to them. But at the back of their mind, they are thinking, hey, after I take up AIA home loan, in terms of payment-wise, it's very inconvenient, because AIA branches is not as many compared to banks. Please take note that you can pay at any AIA branch, any Maybank branches over the counter, or online via maybank2you.com. So payment-wise, it's not a problem at all. In fact, we can always tell the customer jokingly that we have more branches than Maybank. Why? Because it's AIA plus Maybank branches, so definitely more branches than Maybank. Okay? Now, real capital gains. Again, a very important thing to share with your customer, especially given the trend nowadays. It is very common for you to find a friend, a relative, who is having more than one housing loan, who is having more than one property. Why? One they buy for own stay, one they buy for investment, another one they buy for their children's future. It is now very common. But for them, technically, they only have one source of income, which is their salary. So where would they find the money to pay for 3 loan installments? The money will come from the rental. Okay. When you sign a tenancy agreement, when you rent out your property, the tenancy agreement will last for 2 years. Bank Negara will meet up minimum 6 times a year to discuss whether rates will go up or go down. Minimum 6 times a year. So technically, in the 2 years whereby your rental remains fixed, the interest rate has the potential to go up by 12 times. If you were to depend on your rental to pay for your installment, what happens when interest rate goes up? You have to fork out your own money. It will be additional burden. Instead of a new asset, it became a liability to you. It will be an additional burden. But whereas with AIA fixed rate, you will encounter no such thing. Today, your rental is 1,500, you pay 1,500 per installment. In 10 years' time, your rental increased to 4,500. You are still paying 1,500. And then as your rental increase, as the market value of your property increase, your installment remains the same. This is the benefit of having a fixed rate. You don't have to be concerned about all other things. Okay. Create wealth by leveraging on your property. Nowadays, it's just no longer to just talk about fixed rate when it comes to housing loan. Okay. On the recent article in the Star, okay, they were actually sharing that 42% of the wealthy people in Malaysia actually accumulate their wealth by leveraging on the property. This is a real life example. Okay, a recent case that a customer took up a loan with us. This agent went and see the customer. The customer loan with the bank was 400,000. And then when he filled up the application form, he was declaring to the agent he has a credit card outstanding of 30,000. Personal loan, 100,000. Two personal loan combined, 100,000. So his total loan outstanding, all these three add up together is 530,000. The three installments add up together is 4,700. This agent, after meeting up with the customer, he went back and checked the market value of the property. The market value of the property was quoted at 800,000. So this customer actually has some leeway to play around. He applied for additional cash based on the agent's advice. So the customer refinanced over to AIA, not just 400,000, but in total 530,000 to settle off these two other commitments. The monthly installment is at 3,000 compared to 4,007. Okay. You can see an immediate drop. Enjoy savings of 1,006 per month. So the agent turns back and tells this customer, Mr. Customer, now you have a choice. You have the luxury of either you can go out and makan every weekend you want, spend the 1,006, or you can use this additional savings to create a new asset for yourself, something that you were never in a position of doing. This 1,006, you can use it to buy a new property and enjoy the rental return. But of course, when you rent property out, it comes with a lot of hassles as well. Tenancy agreement, back tenants, okay, maintenance of the property, or you can choose something much more simple. You can invest in the AIA investment or saving plans and simply sit back and enjoy the dividends. At the end of the day, the customer actually did this. He used the savings to buy an investment plan and create a new asset for himself. So from 530,000 of all the debts, every month he will just pay, he earns nothing. By coming to AIA fixed rate, he had managed to create a new asset for himself. And this one is only possible with AIA fixed rate. You can still do cash out with banks, with BLR, but when BLR goes up, it will eat into your asset, your capital gain as well. So lastly, I will urge all of you, those that already have an existing housing loan, or those that are considering to take up other banks' housing loan, to do a mortgage structure with us. Since 2010, the BLR has increased by 0.1%. 1.05%. In this period, the BLR has increased 4 times. Ask your customer, any of them that have a housing loan for the last 2 years, how many times have their installment goes up? How many times? I can tell you 90% of the time, 90% of them will tell you it never went up. BLR went up 4 times in the last 2 years by a total of 1.05%. And most of the applicants that you met, most of the customers that you met will tell you, hey, in the last 2 years my installment did not go up. So if your installment did not go up, interest rate goes up, what happened? Your loan tenure will increase. This is why it is very important to do a mortgage structure in AIA. A 1% increase in interest rate, as I shared with you in the first slide, will result in an additional 10 years loan extension. Now this is 1.05%. The average lending rate as compiled by Bank Negara over the last 10 years is 5.9%. Last 20 years is 7.6. Last 30 years is 8.6. Now, Mr. Customer, I don't have the data for the last 40 years. Okay, that is not available. There was nothing available to us by Bank Negara. But what I can tell you is this: you can actually control the future. You can't control what happens in the past, but if you take up AIA fixed rate, you can control the rate that you pay in the next 40 years. The rate that you will pay will be 4.85%. Fixed for 40 years or up to age 65, with a margin of up to 90%. Now you compare it with this 30 years, 8.6, or even 10 years at 5.9. Now you will see why 4.85 is simply your smarter home solution.